could you please tell me about your professional background and your current role, and what your expertise and perspective is in terms of corporate payments?
I would say I do not have a specific expertise in corporate payments. I would have more a general expertise in payments. I started in 2001. I started working at the regulator, at the CSSF, the Luxembourg regulator, and it's there where I was charged to negotiate the first Payment Services Directive in Brussels. So I was the national expert for Luxembourg in Brussels to negotiate that directive. It's via that directive that I landed in payments finally. I was at that time the lawyer in the banking department at the regulator, so I was dealing with many other issues in banking like MiFID, AML, and also remuneration and governance issues, so general banking regulation. And in parallel, I was in charge of putting up and negotiating, discussing the directive first, and implementing it in Luxembourg. So I was co-author also on the Luxembourg law on payment services, which has been published in 2009. And in parallel, I set up the framework in Luxembourg for payments. So also at the regulator, with the authorization procedures, the supervisory procedures afterwards. And we were at that time the first country having implemented the directive in Europe in 2009, which gave us a competitive advantage at that time, attracting a lot of payment firms. So we have a few big players in Luxembourg, like Amazon Payments, PayPal were the first one. They already were there before the Payment Services Directive has been implemented. We have Airbnb Payments now in Luxembourg, Volkswagen Payments. So we have, for a little country, few big players. And that was then I was in charge to supervise them at that time. And I was also in charge of the licensing process at the CSSF. And it's by that way that I really got into that market, exchanging with the firms, finding solutions and compromises between regulation and technology, payments technology. So that's my background until 2017. So I ended up being in 2015 head of innovation at the CSSF. So I was head of innovation, payments, market infrastructure, and governance, which a little bit regrouped all my functions I have done over the years in the banking department. And after in 2018, I left the CSSF and I went back to the private sector. Now I'm a lawyer in payments, fintech, I would say regulatory and banking, and also dealing with M&A payments, still being in this authorization process, so helping the firms to build the business model compliant with the regulation, to find solution if sometimes technology is stuck with regulation, or vice versa, finding alternative solutions. Yeah, and in the going process, I'm advising them on day-to-day issues with regard to regulation and on-site inspections, on-site visits, and CSSF questions, regulatory questions. So that's how I am in that payment world. But as I said, generally payments, not so specific corporate payments, I would say. But of course, I also have different customers who are in that space. Specifically over the last years, because banks do complicate the onboarding for firms. I think you have the same problem in the UK. I heard about it at least, that banks get more and more reluctant to onboard entities or merchants, or I would say smaller entities, corporates, because they always say it's too much risk, not enough money, too much risk, and too much work. That's what they say in Luxembourg.
So looking at current corporate payment trends in the market at the moment, how are corporate payments typically used across public entities and private sector entities for payments and disbursements at the moment?
So I would say for public services, we have dedicated systems which do that in Luxembourg. So I'm less involved in that. But what I see, and specifically also in Luxembourg, being a very small country and relying on cross-border payments and cross-border services, of course, it's an issue, and it's quite important for them to find proper providers allowing them to do their payments in very smooth, I would say, manner. So that's what we also see in Luxembourg, and specifically because all our corporates, our entities or merchants are cross-border. Of course, for them it's quite an issue, and it's quite complicated here in Luxembourg also because we also face this issue that banks are reluctant to do it and are slow. So we have now the alternatives which are coming up.
Mm-hmm. How would you describe the evolution of corporate payment automation in terms of how it impacts things like reporting, fund settlement, and facilitating cross-border trade?
Yeah, I think automation was very important, and PSD was very helpful also for all these niche markets, I would say, or all these providers. Yeah, no, I lost the question. Yeah, and what I really assisted since 2007 or 2009 is that automation is really the driver for corporate payments at the moment. Automation is also not only from a payment side, but also from a regulatory side or for reporting side very important, because it allows them to save costs, to get a faster process again. And so, yeah.
Mm-hmm. Can you explain the background and main impetus regarding the move from physical cards, plastic cards, to virtual and digital corporate payments?
Oh, I read this question before already. I think here again, it has a lot has been done, or a lot has been favored by regulation, specifically. In the last 15 years, with PSD1, PSD2 facilitating that, PSD2 clarifying it also that cards, a payment instrument is not only a card. I think that was also very important information for the market, even though we have interpreted this already larger before Payment Services Directive 2 confirmed it. And now, of course, the last 2 years with COVID, this evolution has even been faster. So I would say it has been pushed. What I can see is that what I was expecting also with my customers who are in a digitalization process or digital transformation process is that all the project they have set for the next 2, 3, 4 years. Most of them have tried to implement them in 2, 3, 4 months last year. So that this process has been quite pushed by COVID also.
Mm-hmm. Just expanding
I have asked the 2 questions, I guess.
Yes. I just wanted to expand on the COVID-19 point and how it's impacted the wider payments environment. Do you think that travel and entertainment spending will recover to pre-pandemic levels soon?
Sorry, I didn't get the question.
Do you think that corporate T&E spending, travel and entertainment spending, will recover to the level that it was before the pandemic arrived?
I do not have really an answer on that. I guess that I guess that the situation is quite I do not really understand now the turn of the question, but I guess that a lot has been also pushed by the pandemic, and we remain in the future. Also in the payment space, the payments habits will also, I think, not significantly change now anymore from what we are used to it now for 1 year, more than 1 year, and I think it's going to continue. How is the situation in the UK? Here, countries are going in lockdown again.
Well, potentially going into lockdown at Christmas, according to some media reports, but it's very uncertain at the moment. So it's a case of watch this space, I guess. I guess it's the same for continental Europe as well at the moment.
Yeah.
So looking at just moving on to the market landscape section of questions, what role do challenger banks play in the corporate payment space, and how are they disrupting the corporate payment market at the moment?
So that's more, that's, I think challenger bank is more, have more impact in the UK. We see less impact of challenger banks, specifically now in Luxembourg, as a general comment. What we do see is that they are helping payment services provide, they are also, they are helping merchants, but what they also do, and where we see where our payment service provider or corporate payment service provider rely on, they are relying on those challenger banks to build up their systems. So they are fulfilling this. They are not banking payment service the payment service providers, the corporate payment service providers usually are not banking service providers, but they are really partnershiping with those challenger banks, because the challenger banks, it's easy. They have the technology, they have the systems adapted to the needs of the corporate payment service providers, what traditional banks do not have. So that's, I think that their role is quite important in that space. In Luxembourg specifically, that's what we see. We do not have, so I think we do not have the same match challenger bank landscape that you have in the UK, of course.
Mm-hmm.
Yeah, how are they disrupting the corporate payment market? Yeah, they're setting up different processes. I think it's a different way to provide payment services, corporate payment services. Having on one side these intermediating the correspondent banking sector and the whole traditional setup, but also relying on many intermediaries in their new sector or new world. I would say that's what we see, and that's what I see when I'm setting up payment firms or specific corporate payment firms, is that they are also relying on intermediaries, on service providers, but it's a different world, a different payment service provider, different intermediaries than bank would rely on to do their payments.
Mm-hmm. How has the Open Banking Directive impacted corporate payments in Europe and the UK? Obviously, open banking is more geared towards consumer banking at the moment, but do you see it impacting corporate payments in the same way?
Not exactly in the same, but I think they're also relying on this open banking opportunity, on the API integration. It's just what I said, also to be able to set up what I just explained with the question before with the challenger, to build up their new space or their new systems. So and I think this open banking, also introduced by PSD2, but the open banking trend or requirement does definitely allow to process the payments faster, and also that's definitely allowed the merchants to conduct business on really a global state. I think that's far easier now than if we would be relying on the traditional corporate payment service provision on that side. So I'm sure that it's also facilitating payments, also for corporates. Yeah, because it's providing this capability to be more efficient, faster, less expensive. They usually are able to provide also better forex rates. So it's I think that's a global. It's just, yeah, integration is better. It's easier.
Mm-hmm. Mm-hmm. What about the impact of Brexit in terms of impacting corporate card usage or trade?
Yeah, that's more UK question, I would say. From our perspective, what we see, what the impact of Brexit is, that we have that might not have been maybe the best thing to do for payment firms, because we do have now many payment firms who have to duplicate their business model to set up an entity in Europe, in order to, because we had many payment firms, also UK payment firms, corporate payment firms in the UK, from the UK, who were already providing services to continental European customers. And yeah, which was of course a positive trend for Luxembourg, but I would say that it's still an additional hurdle for payments, of course, because providing payments from the EU to the UK and vice versa are very often considered as being third country payments, and we see it in the policies, we see in the implementation where we do have to consider this point too, and where we do have to change procedures and those things. So that's a negative point, of course, for the firms. It's a positive point for for the economies for the economy of Luxembourg in general. And it's I would say also challenging for, but I'm convinced that payment providers, corporate payment providers are taking that challenge and are exactly just also trying to find solutions to go over that.
What are
there was some at the beginning there it's quite now from a legal point of view, I think there are a lot of processing changes which have to be done. And that much in trade aspects, but
yeah. So what are the main regulations impacting corporate payments at an EU and UK level? What are the rules around competition that payment firms need to be mindful of?
I think that for payment firms, the rules on competition are more or less the same than for any firms in the market. I think the main regulations impacting corporate payments would be the PSD, of course, Payment Services Directive. The GDPR also has to be considered because we always have privacy issues also in operating payments, specifically with customers. But that's I would say the most important regulation impacting and also facilitating, I would say it's both of them, is Payment Services Directive, which has been very helpful and which I do think still is, because it is the directive which specifically has allowed to take the payment out of a very regulated banking sector, banking industry, and to be able to be more, how to say it, agile, to adapt to the different needs of the different customers, be it consumers or corporate customers. So being a PSD2 lawyer, I would say PSD2.
That's
in
definitely...
the UK, I can't tell you, but I think you're still relying on PSD2. You still have the framework. You haven't done tremendous changes since Brexit now, I guess. I know that in the UK they are working on a buy now, pay later model for merchants.
Yes, that's going to be under increasing regulation as of well very soon, because regulation's been a bit unclear regarding its development. But regulators are definitely trying to catch up with how quickly it's growing as a payment method, for sure.
Yeah. Voila.
In terms of security regulations, sorry, excuse me, wrong question. How do corporate payment programs help companies and public entities to meet mandated authentication and data security requirements?
How do corporate payment programs help companies, public entities meet mandated authentication and data security requirements?
I suppose it could be related to the PSD2 regulation.
Strong customer, but I do not strong customer authentication and all the security issues, but I do not really see there is no difference for them. They have to abide by those rules. Then they do not have specific exemptions. So and that's why those payment services, those payment service providers, or those payment programs, or maybe platforms, what is maybe what you mean?
Yes.
And that's why also what I worked with payment providers, specifically for corporate payment providers, is to just try to ease maybe the setup, the access to accounts. It's sometimes more different for corporate payment and easier for corporate payment programs, because those accounts are really very often just used to operate payments with retail, with suppliers, and to do faster payments in the B2B market. So, but still they need to have secured accounts and they need to have strong customer authentication. So those tools are, and of course those platforms are helping them to do that by integrating this. I would say that here the requirements are differently applied than than for consumers, but those because they use their accounts for other reasons too. So, but I think they have done. They had some. Everybody struggled a bit with those requirements, but finally you can see that it's implemented progressively. And that not everybody does need it. It really depends on how the business model is structured, how the accounts are structured, what the accounts are used for. So, and the providers just to provide those services to differentiate also what level of security requirement is needed.
And how different is the UK or the wider Europe region to the rest of the world in terms of corporate payment usage and management? Could other countries benchmark to these markets, or is it done better elsewhere?
That's a question I definitely cannot answer.
Well, the US has always been the biggest commercial card market, but I'm just wondering if Europe is maybe catching up to the level of usage in the US, or are we just doing things differently?
I think we are doing things differently. That's what I see as a general. That would be a general comment that what we are doing here is in the payment space always different, a bit different, and compared to the US. I'm not really familiar now with the payment provision in the US and how they how these markets are moving, or what is done better there. Usually when I have customers who come, they tell me it's better in the US, it's easier, there's less regulation, it's more flexible. But my experience also is that usually it's not always the case, and that when I go to the US, I realize that sometimes it's not that flexible. But yeah, I would say initially what I can, but it depends also where. When you go to San Francisco initially, what I can say is that when you have a new business model, when you have a new payment product, it's maybe easier to launch it in the US. But once you really want to scale up and to leverage it on the market, then sometimes, and that's what some US providers say, it's easier in the EU because we have one license, not EU, no, why? We have the passporting, we have this collaboration between regulators, which is easier for them. So they are quite surprised sometimes when they come to Europe and they provide their services here. They are sometimes quite amazed when they see that they can provide the services with one license and not needing 25. But that's from now, again, from a lawyer perspective, and that's what I usually experience when I work with my firm. So I'm less on the corporate side, but more on the regulatory side.
So moving on to question about technology channels and usage. You touched on virtual cards before, but can you describe how virtual cards are having an effect on operational efficiencies, like optimizing data reporting or business intelligence analytics? Do they make data reporting a lot quicker and easier for corporates?
Corporate, or be it corporate or physical card, I think you can do your data recording. It might be more automated, or even more automated if it's a purely digital card. But that's also a question where I'm not that, I would say, experienced in. What they say, it's easier to handle. It's easier to overview, it's easier to supervise. That's what firms tell me. But I was thinking
more in terms of mandated or required reporting from the payment schemes like Visa and MasterCard. It helps corporates to facilitate processor relationships if they have much clearer data input and reporting capabilities through virtual cards. Would that be fair to say?
Yeah, but that's what they say. I'm working also with a payment processor, but then normally they need to get the same information from a physical than from a virtual card, and they are still bound by the same requirements. So it might facilitate because it might facilitate the process as such, but from an information or data point of view, I would say it's for me now, not being specialist in that market or in the card business as such, and working and having worked with payment service providers or acquirer or card issuers. On the requirements on the data reporting, I do not see really a bigger difference or a higher difference. But I'm sorry, maybe also I'm completely wrong on that point. But that's more, I would say, a question for the operators themselves than for the lawyer around it.
Sure. So moving on briefly to future trends. Are you seeing many more partnerships between corporates and vendors, processors, and payment schemes, for example, in corporate payments at the moment?
Yeah, that's what I said. I think that API integration has helped, and also these new payment service or the corporate payment service providers we see coming up now, who are really specializing on that specific business. They are also partnering or creating partnership with the processors and the whole intermediaries they are relying on. So yes, there are, and I think the role is important in order to have this I would say this more the tailored payments to corporates' needs, to have to pay to facilitate also the business, or as just example, facilitating the checkout or the high volumes, the liquidity needs for the corporates, for the merchants. So yes, I think that's for me it's important to have a proper partnership on that levels in order to have how to say, to support efficient payment processes for them, because that's what they were not having when they are relying on banks. The certainty that you will be able to process your payments in a smooth way. Yeah.
So looking at the risks and opportunities, I think you've already covered the first two questions in terms of the information that you've already provided. But looking at new developments and opportunities, where do you see the biggest opportunities in terms of growing corporate payments in the future for corporates? Is it by raising awareness amongst employees about how corporate cards can help with facilitating spending, or is it just a case of trying to implement more efficiencies within organizations?
I would say, yeah, I think that you have both of them. So I think the new developments in the corporate payments landscape, yeah. So now I'm having doubts that I might be maybe. I really focused on business payments. So and now you say corporate payments within the entity. So not that we got the whole interview wrong.
No, I was referring to businesses and corporates as both being corporates for clarification. So not two different sectors.
Yeah, but the payments they have to deal with their suppliers and so on, or the payments they do deal with internally?
With suppliers, with external third-party payments.
Because now I was confused because you said corporate cards for the internal employers payments. That's more.
Sorry for the confusion. Sorry.
Yeah.
But yeah, there will be benefits for encouraging more employees within an organisation, but also perhaps they could be used to facilitate better relationships with suppliers in terms of guaranteeing payments and settlement
I think that's exactly what yeah, okay, then we are right again. No, I was a bit sorry. From an employee, there are two sides. Okay, when we take the corporate payments in between in the B2B market, business to business market, having specific corporate cards with specific limits, specific guarantees is of course an advantage, and I think that's what we need to take. And I think that there we will maybe in the future also see new products coming up with specific insurances, maybe depending on the businesses, and there will be new developments. I think I have seen a lot of new developments already over the last years for the corporate payments in-house. So with employees, of course, it's also facilitating, I would say the whole remuneration landscape for firms sometimes, very often, because they can rely on a predefined scheme and processes. But this is less an issue in my day-to-day work, I would say. But what the issue is, or what I'm really dealing with on a day-to-day basis is providers setting up payment system, payment services for corporates, because it's definitely a need in Europe. I would say we have the specific problems in Luxembourg that the banks do not want to be buzzed. To be buzzed by opening those accounts, and because they, as I said in the beginning, it's too much work, not enough money, and too much obligations, and high risk also, because you have to concentrate far more on the transaction monitoring of these accounts, because money can really come from everywhere. But when you have a retail customer, you exactly know what his behavior is, where usually he gets his money from, but with corporates you have to concentrate on these incoming funds, which can come from everywhere. So, and that's where I really see the developments coming. Like we get more and more specific businesses concentrating on that business, and because they then can dedicate all the resources to that business, and also are able to implement the requirements around AML, KYC, and monitoring. So, voilà.
So, yeah, looking forward to the key strategies that corporates need to include. Can you explain the essential components of an optimal e-payment strategy for commercial cards and bill payments, wire transfers, and the importance of the back-end platform?
These are really more questions for corporates as such.
But what would you say would be the essential steps for any corporate entity looking to implement an automated corporate payment program?
But you named all the essentials. One, I think these are the essential components of corporate payment setup. And of course, what really needs to be, you need to have safe and secure platforms. That's a big issue. And you also need to do for corporate now a proper due diligence too, and that's another risk which is coming up now with more firms specializing in that sector, to properly do your due diligence on what technologies they are using, what firms they are partnering with. That is quite important. It was easier with the banking sector because you went to the bank and you was relying on the existing regulated framework. In this framework, you have more technical providers, technology providers, and you really have to do your due diligence is I would say higher when you are implementing an e-payment strategy. So that's and usually you should then, I would say, if I would be a firm, I would really rely on a provider who is able to provide me from A to Z the whole panel of products I would need to properly and efficiently operate my corporate payments, being payouts, bill payments, and also salary payments.
So having a fully integrated end-to-end platform would be optimal.
I would say so, because what I see now is that otherwise you need to rely on different technologies, you need to rely on different providers, which on one side maybe you might give you the impression that you mitigate the risks, but on the other side, due to the different technologies you have to oversee, it's going to be more expensive. It's going to be more I would say more time consuming. So I would really, for need payment strategy, I would really give preference to in a wholly integrated platform there.
And from a legal and compliance perspective, it pays to have due diligence and strategic reviews on an ongoing basis. Yes,
but that's from the payment service provider side, of course, he has to. But yeah, on the other side, you are exposed to maybe higher fraud levels, depending on what kind of on the cards, for example, AML risks. But I think this is more a risk which is lying on the payment service provider side, not on the customer, not on the corporate side, I would say. But of course, they also need to do their proper assessment, with whom they are dealing, from whom they are getting the payments from. So, but I think that's more to the job which has to be done by the provider.